Thank you to everybody who attended, and thank you to GCI for giving me an opportunity to be part of this discussion. Let me see if I can share my screen with you, and let me know if you're able to see my screen.
Yes.
Okay, let me just do
You
this.
just make it a slideshow so that it's.
There you go. Okay. Once again, thank you so much for giving me an opportunity to talk to you about the credit unions in the US. And when you talk about financial inclusion, I think my brother Brian has already talked about it at length. I'm not going to talk much about that. But what you are trying to say is everybody can be part of decision making when it comes to finances and how we are being financed. And I'm going to focus on the credit unions. And thank you so much, Sister Smangere, for such a great presentation also. Just to give us an idea on, I know Mr. Brian sounded more philosophical, and you came down to our level where you're very, very practical as to how can we participate locally. And I really enjoyed your presentations. That was great. Now, the philosophy of a credit union, or what our brother Brian talked about as cooperative banks in South Africa, their philosophy is we are saying we are not for profit, we are not for charity, but we are for service. They are focusing on servicing their member. Here, what we have is people helping other people. I'll quickly go through this and give you a short history of what you call credit unions. Credit unions they operate. It's exactly the same mentality, the same way we run our stokvels. That's how credit unions function. If you could understand how a stokvel is run, then you would understand how a credit union is run. It's just that it's more technical in a way, but it's still the same kind of thinking. Credit unions they started early, in the 20th century when we had the Great Depression in the US, and it was started by a group who shared, say, a common affiliation. It could be a group of employees or local community or churches or some professionals. Sister Smangere talked about teachers, those kind of professionals who came together and said, you know what, we can no longer get funding from the banks. Why don't we start our own stokvel kind of? We contribute a certain amount, and as we contribute, in case somebody needs help with finances, or they want to build a house, or they want to buy a car, then we can just take from our coffers and give that person the money, and they will bring back the money with some interest. So the money it circulates within our group. It's not going outside. For example, in this case, we have communities like it could be a particular community, let's say in Soweto or Guyana community or Nkwankwa community or Cape Town community. You can form a credit union and say we want our money to circulate within our community. Here we have an example of the Seattle Credit Union that was founded in 1933. It was just sort of a city credit union, and it was focusing on the Seattle employees. So as long as you're an employee of the city, then you could qualify to become a member. Now, if you think, like I said, if you think like a stokvel, nobody owns a stokvel. All of us, we are just members of the stokvel, and that's how credit unions function. Like I said, during those days, the banks will not finance people, and they said, okay, let's come together and do our own business and work within ourselves to make sure that we get money. Now, if you look in the US currently, as I'm speaking, there are more than 5,000, actually almost 6,000 credit unions now. Small groups of people who come together and they say, okay, let's do all the financial transactions within ourselves. And they have more than 100,000 million people who are members of these credit unions. So it's almost 45% of the economically active people who are working, people who have businesses, people who have small businesses, big businesses, so almost 45% of them, they belong to a credit union. Actually, when I came to the US, my first account was with a credit union. And that's why it makes it easy for me to understand how it works. It makes a lot of sense. Here I have an example of some of the credit unions that we have. For example, there is a credit union for the securities, for the security guards. They form their own security union or credit union. The teachers credit union. Actually, the one that I joined when I came, the first one was the teachers credit union, and I'm still a member even today. That's where I get all my financial services from. Christians also they can form a community, and they have their own credit union. We have a Christian community credit union, evangelical Christian credit union. Actually, these credit unions, most of them are the ones who finance churches. The reason why almost all the churches in the US, they have church buildings, it's because they don't wait for fundraising or to have a building fund project before they start building. What they do as a church, if they have a solid membership, a certain minimum that is required by that particular credit union, as a church, you can go to the credit union and say, we want to build a church. Can you give us maybe $500,000? Can you give us $1 million so we can go and build a church structure? Now, if you meet the requirements that they need, a certain number of people, and they look at your financials as to the financial records as to how do you get monthly, then what they will do, they'll give you the money and you go and build a church. Within 3 or 4 months, then you have a church structure. Then every month when you raise the funds, when you have those, when it's time for the offerings, you also have time for raising funds to pay back the loan. And monthly, then they pay a certain amount, a very low amount, which is not strenuous to the church. So in that way, it makes it easy for churches to have building structures. Or you want to build a school, you can always do that through a credit union. Because those credit unions, like if it's an evangelical credit union, they understand what you want. Unlike when you go to a bank like ABSA, you go to a bank like Standard Bank, or you go to NetBank or other banks, they have a lot of hurdles that you have to jump through before you could get funding, especially as a church. They may not even consider doing that. And now you have to struggle as a church. You have to spend the next 10, 20 years fellowshipping under a tent, or mkuku, while you are busy trying to raise funds for your church. So it's just a matter of philosophy, whereas you can use that money and say, okay, if we are able to contribute at least, say maybe 5,000 or 10,000 a month, why don't we just go to a credit union, an evangelical credit union, and they give us funding up front, then we build the church that we want, then every month we pay that 5,000 to the credit union for the next 10, 15 years. Just like what we do when we need a bond or we need housing. So it's the same kind of mentality. You can have Los Angeles Federal Credit Union. This one is for the people who live in the Los Angeles area. They qualify to be members of the credit union. GE, this General Electric Credit Union, it's a very big company. Actually, it has more than 200,000 employees. These are the guys who make all the General Motors cars. They make refrigerators, they make stoves, they make a lot of appliances that we use in our houses. They are manufactured by GE. So they have their own credit union. If you work for that company, then automatically you're a member of the credit union. So you do all your banking and all your finances. If you need finance for your housing, then your company will sponsor you. Then you pay it back just like that. We have the Navy or the soldiers. They can have their own credit union. And that's what we have here. So it depends on the sector. Any group of sector can form a credit union. You can create a credit union that will work for you. Let's quickly go through how the banking system works. And I'll try to summarize. I'm not going to get into the details. I'll just give you one sentence explanation of how it works. When you deposit your money in the bank, that money does not stay with the bank. Especially if let's say you deposit it for a year or for a month, depending on the term that you have agreed with the bank. What they do, they take that money and they loan it to someone who needs the money at that point. But that person, when they return the money after 12 months, that money comes back with some interest. It comes up with some interest, and that becomes part of their profit. Now, that interest that you pay, it does not go back to the customers. It goes back to the people who own the bank. And those are the board of directors, the shareholders that Brother Brian was talking about. Those are the people who get all the dividends. They get all that money. It goes back to them. You as just a customer, you are just a customer. There is nothing that you get out of it. The difference with the credit union is all that money, all that interest that comes in, it goes back to the community. It goes back to those who are members of the credit union. So when you are a member of a credit union, you are not a customer, you are a member. But with Standard Bank, with ABSA, you are not a member, you are just a customer. That's why you will never receive an email or a letter that says, oh, now can you attend the AGM? Can you come and vote? You will never receive that from the bank because you are just a customer. But with the credit union, at least once a year or so, you'll get a communication that say, okay, now it's time to vote on a particular issue. What do you think as a member? You can attend the AGM and go and vote for your directors. You can go and vote for who should run your or should manage your bank. That's the difference between the credit union and the bank. The credit union is owned by the members, whereas the bank is owned by other people that you may not even know them. Some of them are not even members of that. They are not even part of they don't even bank with ABSA. Some of them, they don't even live within that community. You don't even know where some of them, they live outside South Africa, but they own that bank. So why do people or consumers like credit unions? Number one, it's convenience. It's convenience of shared networks. What happens is, Sister Smangari talked about, a group of credit unions that come together and work together. What happens is all the credit unions that are available in the US, when I'm a member of one credit union, I can use their ATMs for free. There's no fee that they charge me. Whereas if I take my card and use it in another bank's ATM, they will charge me a fee. So these credit unions, they work together. They share their resources. And in every community, there's a credit union ATM that I can always go to and use it for free without them charging me any fee, because most of the fees that these other banks charge, the credit unions, they do not charge you those fees. Another thing is the financial education. Credit unions, they take time to teach their people about how finances work, how you can run your business. They train you. They will invite people who know how to run businesses. And they'll give you advice. For example, I always advise people, never get into a business that you have no idea what's going on in that business. Never get into a business that you have no experience working with, because you're going to lose money. So always, you must get some training. You must have an idea of what's going on before you put in your money. You have to understand what you're putting your money into, so you do not lose your money just because somebody looks successful from far or from outside. When you look from outside, it looks nice, it looks successful, it looks like everything is going well, and you quickly jump into it. When you get in, then you end up losing a lot of money. I know my brother Brian talked about pyramid schemes. There are a lot of people who were cheated. You look from outside, oh, this guy is driving a very nice car, he's living in a nice house, they take vacations, you see them on Facebook. Oh, it means I can also live that kind of lifestyle. When you get into it, you realize that, it's not as rosy as it looks. So the good thing about credit unions, they always have classes where they teach you how to run a business. They teach you how to balance your finances. They teach you how to get out of debt. They teach you, a lot of things. When you want to buy a car, most of us, we didn't know what to do when you buy a car, and you get into things that you should have never been into, because we don't learn from school. There is no class. You will go through your school system from grade 1 up to grade 12, or even up to university. Nobody will tell you how a credit card works. When you start working, you just jump into a credit card. Then now you are deep into debt. You can't get out of debt. because nobody told you what you need to do if you want to buy a house, what you need to do when you want to buy a car. Most of us, we don't know how to do all these things. Now that's where the credit union comes in, because it's about financial education. They teach you how to run your finances, how to get out of debt. So another thing about the credit unions is they have fewer and lower fees. And I will explain to you why they don't charge high. They don't have high charges. When you work with them, the lower cost of financial services to members and their families. So it's less costly when you bank with a credit union. You don't have to pay much. Even the interest, when you go to them, their interests are always low. All my cars, I bought them through a credit union. Why? Because their rates are much better than all the banks that I know in America. It's much cheaper that way. It's much easier to get finance. When I need any financial need, if I need financial help from a bank, I don't even have to go there and I spend the whole week trying to negotiate. I just pick up my phone and I call them. And I know within the next 5 minutes or so, they will tell me, okay, Mr. Manasseh, you can come and get your check, or which account do you want us to use to deposit the money into. It makes it easy, because the credit union, another thing which I like about them is their services. They know me, I know them, because they are local people. They are people that I work with, I go to church with. It makes it easy that way. It's not a financial institution that's standing out there and I have to go there and beg for help. No. And they tell me, oh, your application has been successful or not. It's somebody that I know I can talk to. I'm a member there. We are members, just like in a stock fair. We know each other. Like I said, there's also lower cost of loans and deposits to members. Those are some of the benefits that we enjoy. Also, another thing that will help is with the church financial support. Like I said earlier, they are able to finance churches. If you have a building project, or whatever project that you have, or you want to build a school as a church, they can easily finance you, because some of these credit unions, you as a church, you own them. So it makes it easier that way. Or the group of churches, they come together and they form this credit union. Like there is one that my pastor used to be the president of that Christian credit union. So all the churches that have come together to form this credit union, all these churches, anytime they have a project or a building project, it's easy for them to make a decision and just support each other that way. So another thing is the products are usually designed to assist low-income individuals and families, because you don't have to earn a lot of money to become a member of a credit union. Anybody can be a member of a credit union. And they also sponsor and support charity causes that their members care about. It could be youth programs or any other programs that we always sponsor as a church or as a community. Financial literacy, like I said, it helps to increase savings. It helps people to understand how the banks work, how to increase your savings, how all these things work. When you get a lump sum of money, I always advise people, when you get a lot of money, the first thing you do, you pay off all your debts. Once you are out of debts, then you are in control of your finances. As long as you are still living with debts, you will never control your finances. So those are some of the things that we learn as we continue. Those are the things that we learn from the credit unions. You have to make sure that you get out of debt first before you do anything with your money. Then from there you can come and we can plan on how we can help you with the rest of your money. But then at that point you are debt free. You can make decisions on your money. As long as you still have debts, you have no control of your money. And there are some classes that I always do also on how to get free from debts and how to live without debts. Those kind of classes, we always offer them. Another thing is increased investment in education and medical care. Sometimes they focus on helping people who have needs in those areas. If you want to take your kids to school or to university, or if you have some medical care need, credit unions, they always are very, very helpful in supporting in those kind of areas. Another thing is they also help with the local economic development, because like I said, the credit unions are more localized. So most of the help that they give is for the local people. They help you build your own business. They educate you on how to run your business, and that way, they are developing the local economy. You don't have to depend on somebody who is in Cape Town or somebody who is in Durban or somebody who is in Johannesburg and you are in Guyana. No, you run your own economy locally and you develop the place where you live. Let's look at I'll quickly go through the difference between the bank and the credit union. Number one, banks are for profit. Make no mistake, that's the number one purpose of a bank. They are there to make money and nothing else. Another thing is the bank, they pay tax because they are for profit. And the bank, they also have a structure that they need to feed. They have corporate structures. Like I said, with the credit union, it's all localized. But with the bank, they may have a regional structure. I mean, other than the branch, they may have a regional structure. And that regional structure, it has its own governance. They have directors, they have everybody. They have the provincial structure. They have the national structure. All those structures, all those strata, they have to pay them. So you have to make money in order to pay all these executives. And those executives, they get a lot of money. Some of them, they are paid over $1 million a year. They get a lot of money. So for them to be able to pay them, they have to make maximum profit. That's why they will charge you for everything. And sometimes, it's very pathetic. When I go to my credit union, I'm not charged for using my ATM, for using any ATM card. Even just to check the balance, it's free. When I withdraw money, it's free. When I deposit money, it's free. When I transfer money, it's free. But with the bank, they will pay. I mean, you will pay for everything. You will pay even for the aircon that you use when you come into their bank. They will charge you for withdrawing your money. They will charge you for depositing the money. They will charge you for using their services. They will charge you for just for standing in front of the teller. You will pay for that. You pay for everything. You pay for everything. And they have many branches, and they have to service all those branches. And it's owned and controlled by a group of shareholders. These shareholders, they are not necessarily members of like I said, some of them, they don't even hold accounts in that bank, but they're just shareholders. Some of them, they don't even live in South Africa. If you are a customer, you are just a customer. You are at their mercy. You always have to go and beg, even just to open a banking account. They make it so difficult. They come up with a lot of requirements. If I want to open a bank account with a credit union, I just go there and talk to the service provider or whoever it's up there in the bank. I can talk to them. Within the next 10 minutes, I come out of the bank or out of the credit union with my card, because everything is done there. They don't have to send it somewhere to be approved by somebody somewhere in Johannesburg in one of those high-rise offices. No, it's all done locally. The decisions are made locally. If that teller cannot make a decision, she can just quickly call the manager in the bank and say, "Can you come and help this customer?" And I can talk to the manager, because everything is local. It's local. So I'm a member there. The bank profits go to the shareholders. They are the ones who make decisions for you, because they control the bank. These are the people who own stock in the corporation. Those shareholders may not even have an account with the bank. What they do is they only hold stock. Let's look at the credit union. The credit union, it's not for profit. It's a non-profit organization. So this financial institution, since it does not have to make profit, another thing, it's controlled and owned by members. It's controlled and owned by members. So since they are not for profit, in other words, they don't have those big structures that I talked about. They don't have the regional structures. They don't have to pay board of directors. They don't have to pay some directors and executives at the regional structure, at provincial and at national, and all those kind of fine. No, they cut off all those costs. That's why it makes it easy for them to run without charging a lot of money. And they are of the community, and they are for the community they serve. So they're in the community, they work locally, and that's where they are. Another thing is they are governed by a board of, and this is very important to understand. They are governed by a board of directors, and those board of directors, all of them, they are volunteering. These are the members who volunteer to help run their own bank. So there is nobody who gets a 1 million check at the end of the year and so on because you are a member of the board. You get no. All of them, they're just members. They just volunteer to help. So the board of directors, all of them, they are volunteers. The only people that we pay are the people who are at the operational level, the local branch manager and the tellers and the people who help with the services. Those are the only people that you pay. So that's a good thing about it. The proceeds are reinvested in the day-to-day operations of the bank. And then what happens is some of them are returned back to the members in various ways. Number one, like I said, lower fees. It makes it easy for them to run that bank without charging you for everything that you do. The loan rates are very, very, very low. At the end of the day, you as a member, you also benefit. You get high interest on your deposit because all that money, all that interest that come back, it goes back to you as the member. And also some of them, the money they use to develop, like technologically, they improve their ATMs, their technology, their mobile banking, and other services like home buying workshops. Like I said, they will always have workshops for their members. Savings workshops. They help you to understand how to save money. They help you to understand how to get out of debt. They also do credit counseling. If you have problems with credit, they can sit down with you and they help you to get out of the situation. Taxation, like I said, they are non-profit, so they don't pay tax. They don't have to worry about tax. And the structure, like I said, their structure is different from the bank structure, and also they are localized. Let's look at these two structures here. Here we have the bank structure and the credit union structure on the left. The green part is a credit union, and the black one is a bank structure. Let's look at the ownership. The credit union is owned by the members. You as the members, you make decisions. You decide. You make rules for yourself as to who will qualify to get a loan. It's not decided by somebody somewhere that you will never meet. No, it's decided by you as members. Then you sit down and you draft the rules and the regulations of who will qualify to get a loan from your own bank. Whereas the bank, it's owned by the shareholders. Those shareholders, they want to get dividends. They want to get paid every month or at the end of the year or end of the quarter. They need to get some money. So the bank always has to make sure they raise as much money as possible so they can get their money at the end. And also the credit union, it's run by the board of directors. Those board of directors, they are volunteers. They are members elected by members. So when you are a board member of the credit union, you don't get paid. You are just volunteering because you are a member. You own the bank. Let's look at the bank. It's run by the board of directors. All of them, they are paid and they are elected by the shareholders. They are elected by the owners of the bank, and they get a lot of money. The credit union also, under the board of directors, they have the CEO. And that will be the person who is in the local bank and the employees. That's it. Those are the only two groups that you will pay. Whereas in the banking structure, we have the CEO and you have the employees of the bank. You as the customer, you are down there. Nobody consults you when the bank wants to increase their rates. Nobody consults you when they change the rules. You'll only be told when you are standing in front of the teller and they say, this is not how we do it. It has been changed. So no, but this is how we used to. No, it has been changed about 2 months ago. That's the only time you realize that, things have changed in the bank. So that's the difference between the two structures. And this is just a summary of what I was talking about. Credit unions, they're not for profit. They're here to serve members. There are no shareholders. The banks, they are for profit. They answer the shareholders, not the members. The bank does not have to give you any explanation. They make decisions without your consent. You just have to agree and take whatever they tell you. But with the credit union, you have a word. You can say no to what you do not like as a member. Credit unions, they set interest rates as low as possible, whereas the banks, they want to make maximum profit. So they set their rates as high as possible. That's why they charge you for everything. You pay a lot of fees for everything. There's a fee for everything, even for using their pen. I guess maybe there is a fee for the banks, they just have fees for everything. Credit unions, they try to help members avoid fees. The banks, they set fees to maximize their profit because that's how they make money. So they have to charge you for everything. Credit unions, they offer financial products like savings accounts, checking accounts. I mean, the loans, everything that you get from the bank, you can get it from the credit union. Credit union, the membership is restricted, but there are usually many ways to join. For example, if they say this credit union is for the teachers, they'll say it's for the teachers and their families. In other words, even if you're not a teacher, if you are a wife of a teacher, you can join. If you're a child of a teacher, you can still join. So they always find a way to help you join in, even if you are not, you do not belong to that segment of a group. With the bank, anyone can join. There's no restrictions there. So the credit union philosophy, like I said in closure, not for profit, not for charity, but it's for service. They help to serve the people. It's people helping people helping each other. Like I said, it operates just like a stokvel kind of.